All right, people, 85,000 or around that number is very, very crucial to Bitcoin to hold. And there's a good reason why. Not really technical analysis. That honestly wouldn't have too much bearing, but miners do have a huge bearing. Let's pull up the chart. Yes, this is the chart of Bitcoin price versus average mining costs. You can look at this at macromicro.com. They gathered the data of a lot of Bitcoin miners. The hash rate has continued to go up since the halving. And remember, the halving essentially doubled the cost to mine one Bitcoin as it halved the rewards of each block. As you can see here, right now, well, on April 8th, the latest data point we have, the ratio is 1.12, whereas Bitcoin price is not as great as Bitcoin mining, but that was when Bitcoin was 76K. At this point, we're almost 1-to-1. If you look at the 30-day ratio up until April 8th, it was basically 1.04, which means the actual Bitcoin price, I think, the Bitcoin mining price was 4% above the average Bitcoin price. And that actually has caused a sell-off among miners. In March, the publicly listed Bitcoin miners sold about 40% of all the collectively mined Bitcoin for March. Now, the publicly listed Bitcoin miners aren't the only ones that mined Bitcoin. So that's actually the biggest sale in about 4 or 5 months since October 2024. Since the halving, the publicly owned miners have actually been accumulating Bitcoin, but this month, last month, they've actually reversed the trend. What does that tell you? That means they are bleeding costs right now. Essentially, you could say they're selling out for profit, but if you look at the graph, they're not really in that much profit. I think their costs are actually outpacing the profit, and they kind of need to sell to stay afloat, which is why they haven't been accumulating even more. So that's why this is a critical support for Bitcoin, because if we lose the support, it is possible that the hash rate will collapse 20-30% and the price will go down 10-15% again, because Bitcoin isn't viable if the mining costs long term are more than the rewards. So I actually see one of two options. We're kind of at a fork in the road, and we could actually go up a lot. They could manipulate Bitcoin's price to where it's above 100K, so they have a very, very healthy profitability without selling too many of their coins. Or it could go the other way, and people could quit mining, the hash rate could drop, and then price would drop, but not as much as the hash rate. Those are the two possibilities. You can't just mine forever at a loss because you obviously have operating costs. And they've been mining at about a 4% loss for the last 30 days, which isn't too bad. But if you actually look at the Bitcoin graph, for even the last year, they really just haven't been that much in the profit in terms of average Bitcoin cost. Now, the large miners might actually have lower costs than some of the other miners, but they're probably not too far off. And I've heard from several sources that the average price to mine a Bitcoin at these hash rates is about 80K, which might put them slightly in the profit, but depending on Bitcoin variability. So that's why it's very, very important that we hold 85K or like 83K. If we do hold for long enough, I do believe we will have to bounce back up, as the miners will probably manipulate the coin to go back up to ensure their profitability. But if we do collapse where a lot of miners actually have to shut down, we could be looking at a bigger drop. So that's the real reason, the physical reason we have to hold like low 80s at least. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.